All right, all right. Good morning, everybody. No morning briefing tomorrow. Looks like we got a little weakness today. Market's looking for a reason. Uh, was digging through a little bit of the options material. SPY has a GEX flip that we're crossing through at the moment. If we cut through this GEX flip, we have 580 as a 0-day options level of interest. It's very likely we'll gravitate into that direction. And the 1SD is at 579, so we could overshoot 580, get into that 579 before we stall and pause on the day, or we get a V bottom flip, which looks a lot like this. So that's kind of the base case argument for the day, is that this lack of market direction is going to continue to fade us to the downside. Of course, Europe helped with that a little bit, but at the moment, that's what we're looking at. Red around the world. The only thing even slightly in the green is Japan, and it's just slightly there. Everything else is negative, with Europe down the most, and it's taking everything else with it. We got a lot of Fed speakers today. We also have additional auctions today. None of these events are big events, right? We're looking for jobs data and we've got a lot of earnings on the table, which will go to jobs. It'll go to the economy. How are companies doing, and have they been choked out by the Fed? So it's a big week. It's just not some single data print like a CPI, PPI, and non-farm payrolls kind of thing, right? It's more of just a broad market sentiment. And you're probably going to want to get comfortable in this state, because we're going to be this way until at least the second week of November. The auctions are looming really heavy. And then we've got the elections, we've got FOMC and QRA also at the end of October. So everything's just, it's just piling up. Look at tomorrow, and we've got European Central Bank members chipping teeth all day long. And we've even got a couple of US members in there just so that they're not outdone, right? They got to get their own word in. This is going to go to the heart of the warm, fuzzy feeling and sentiment in the market, right? This isn't connected to some particular earnings event or anything like that. All right, so we got yesterday's range. I know this looks really loud. Just focus on the RTH of yesterday. We just broke outside of it into the liquidity zone, tapped that 111, and the 1SD or the ADR half. So one thing about these ADR levels is if we get there early enough, we can go to the other ADR by the end of the day. Now, I don't see that on the table today, but that doesn't mean it can't happen. There's a 50% chance, no matter how bearish, no matter how bullish, there's a 50% chance that the market changes direction between 9:30 and 10. That's a statistic you really want to put in your pocket, because it's a coin toss, 50-50. No matter how heavily weighed to one side we are or the other, that is the statistic that should really weigh in your mind. Between 9:30 and 10, we can change direction and go the other way. My base case argument is that we're going to continue to test these lower levels. We've got the 3-week moving average at 58.72, and then the 10-day moving average and the full ADR 58.58. Zero gamma is a long ways off. That's really not a focus for today. We're not expecting that sort of move. And if we think about yesterday's range, I've only got the RTH marked here. If we captured all of it, then it's this range here. So, getting down to 58.71, that's not really that big of a deal. We're talking about stretching outside of Friday's range into the liquidity zone, perfectly measured into the liquidity zone. Well, that would make a really nice double bottom bear trap and then a rip back in the other direction where we could rally into resistance, which would be this trend line here. Right, so kind of ID that 58.71, then we bounce, run up into the ADR from below into that angled line. That'd be a rally back into resistance, like a dead cat bounce. And then through tomorrow or the next day, a fade down into a new ADR level, right? Because we can get back to 52, 53, 5400 with just nice gradual moves lower. It doesn't have to be, big violent dump down in a single shot. But we're right now primed for a double bottom setup on the RTH. We'll focus on that first. If this isn't where we flip and go up, then we'll focus on the entire day of yesterday and that next low, 58.75. They're not hedging yet this morning, and volume sitting at 57. It's a little light, but not light enough to be of major concern. Put those ADR levels into some perspective. There's a lot of history with these ADRs about going to the other side by the end of the day. It doesn't owe us that by any means. It's just worth really keeping that in mind. I know that these ADRs seem to be a mystery to a lot of people, but this is the average range over the last month. It's a 21-day average. So from where we opened in Globex, traveling that much is what the market has been doing on average on a day-to-day basis. So it makes perfect sense that that's about as far as we go today. And we bounce there and we run back up and we just stay within this zone because, well, that's what we do on average. But then there's the other side of the equation. If 53 points is what we've been doing on average over the last 21 days, and that would equate to like 26 points this way and 26 points that way, and it's a 53-point range between these two, then we would bounce here, hold the line, and close underneath this red. But if we look at those 53 points, and from where we open in Globex, we actually just move 53 points in one direction, that would get us all the way down here, 58.58. And again, it's just what the market has been doing. over the last month. It is its average move. So we got the new week. We got the new weekly pivot. The daily pivot is higher than yesterday's, but still inside the range. That's only mildly bullish. Price opened above, so that's also mildly bullish, and it opened above the floor pivot on the week, and that is mildly bullish, except we've broke both of those. We're now underneath it, and we're completely outside the channel, and the ES doesn't really spend a whole lot of time underneath its weekly pivot. So when we are underneath it, we're negative. We had an example back here where we got underneath the weekly pivot, and we were under there for about a day. We came back up, cut through it on the other side. So at the moment, we're not looking for some heavy, exaggerated, really nasty market moves to the downside. We don't have a reason to get that bowed up to the bearish posture. But when we do get underneath there and we start to really get negative, we can expand underneath the floor pivot on the week by 6% easy. So the mean reversion on the upside is a lot less than the mean reversion on the downside for these floor pivots, at least on the weekly pivot. We've got a lot of examples where we've expanded considerably to the downside underneath these floor pivots on the week and still not have an oversold bias even after that far of a drop. Well, we're just getting started. It don't mean nothing yet. So if the option structure doesn't catch us and the ADRs don't help us, we've got 58.50 as a next level of interest. And then we've got this point of control from 2 weeks ago. That would be 58.32 cog line. Let's get underneath that if we're going to continue to go to the short side. Otherwise, that is the short target. If you're looking for a swing, say in SPY, that would be the idea. 58.50 for today, or 580 today in SPY, with 579 as an overshoot. But that's just for the day. If you're looking for a swing, you'd want to run it into like 576 or 575. This is just one day also, and we're not really all that bearish yet. So, you know, as much as I'm talking about the negative side this morning, I wouldn't get too hung up on a swing short yet. All we need is a change in sentiment, because that's all we've got at the moment anyways, is a change in sentiment. All of this that's happening right now is nothing more than sentiment. It's not like something specific happened, you know, like when Boeing was killing entire families when their planes were crashing. That was an actual thing. There was a reason for Boeing to go down. With the markets this morning, we don't have an incident or a specific target to say, oh, well, it was this. This is why we went down this morning. It's just sentiment. And that can change. 10-day, 30-minute volume profile. TPO and volume profiles point of control are lined up again. Yay. Both are over our head. So any move to the upside, any bullish bias, we've got to get through that structure first. Otherwise, this is forming out to be a nice topping pattern. It's like a TRB upside down. Not a lot of help on the volume structure. Each one of these will be like minor structural price shelves. So 58.60, 58.32 cog line. 57.92 cog line. It's nice to see that those cog lines get reinforced with the profile. But it also means it's very likely we're not going to see this point of control move anytime soon. We would need to get to one of these other levels and then hang out there and build it out enough to actually shift those points of control. No new VPOC. If we had added one, we had already run through it last night around midnight. Getting down into Thursday's low wouldn't really be too much of a surprise. That would be the overshoot from Friday into that liquidity zone. All right, so on Friday, we measured this range, trying to project or anticipate what the volatility looked like on the upcoming week, comparing it to the week that we just had. And on Friday, it wasn't too much different. Of course, it didn't count on Friday. That was just a preview. Now we can see the current week's range is just a little bit smaller than last week's range. Since these ranges are built on time and volatility, and we have the same amount of time this week as we had last week, then the only thing that changed is that volatility has gone down a little bit. As I mentioned before, economic events of size will reduce volatility before they happen, right? It's kind of counterintuitive, but if we're waiting on CPI for 2 days and the market goes sideways, a sideways market that isn't moving is reduced volatility, right? So that big events can lower vol into that week. This isn't down by much though. The volatility, it didn't shift noticeably. It's just a minor shift. So this week isn't much different than last week in terms of the volatility structure, which makes sense because if you've been keeping track of spot gamma, everything is focused on the election at this point, and NVIDIA. And NVIDIA is still all of NVIDIA's option structure still pointed to a bullish NVIDIA, that it isn't overbought, it hasn't traveled too far, and there's still a lot of upside left, which is just wild, but there you go. Looking at the 10-day, we're still holding above it. We're really close to finishing our correction. This indicator is on a daily chart, so it's not looking at the intraday on a day-to-day basis of whether or not we go down and tag it and come back off of that 10 to close above it. But we are looking for a bit of a reset, either because we go all the way below the 10 and come back up, or because we just go down and interact with the 10 and then come back up. Either way, once we get that reset, we can have some really nice moves to the upside. We just got to get it first, right? Got to pay the piper. Looking at the 10-week, 2.3% above the 10-week. We're not overbought. We're not overextended. It doesn't owe us any sort of pullback or mean reversion. We could fade another 1% closer to that 10 and we still would be in a comfortable spot. So everything from this time frame, the weekly, still looks great. There's absolutely nothing wrong China ADRs are down this morning, along with China, the group. Emerging markets, that's basically China again. Bonds with TLT. Technologies down with XLK, Bitcoin, the Mag 7. Everything that we need for one of those bullish rally days is down. Looking at what's up. Nat gas and gold miners. So energy, gold miners, precious metals, nat gas, this is not what you want for a bullish rally day. USO, crude, agricultural commodities, uranium. So this is a little bit of growth versus value or risk versus risk off. The idea was to get an everything rally with the lead in the Mag 7 and tech and software, and then see it bleed out into everything else. Instead, tech and Mag 7 and software down, and staples, commodities, they're up this morning. If you're looking for a V bottom flip today, that's one of the things you're going to want to see change. Sure, the options market could do it on a 0 day all by themselves, no problem. But it'll work better if you've got some support from technology, the Mag 7, something, right? Otherwise, their attempt to flip it back the other way very likely fails. And so we'll either stall out at those lows or we'll really sell off. Not expecting that, right? It's always on the table. I don't want to say that it can't happen, but a significant sell-off isn't on the table today. 580, maybe 579 is an overshoot in SPY. That's not very much. It's just a typical move. It shows cloud down quite a bit, but it's just an algo print. You know, you always want to look, because a lot of times cloud will do that. So will IGV. But when you go in and look at it, it's not like it's getting a lot of flows. It's just one single algo print down there. So it's not really helpful and it's kind of misleading. Airlines kind of expected to be doing better this morning. At least Spirit was in the news, and I think it was on their debt restructuring, but it's certainly not translating over into the ETF yet. It's a little bit of a turnaround, but it's still negative. And after the move that we had in semiconductors, you know, that rally up, well, this seems to imply that that rally back up really was a dead cat bounce, at least so far. We've got a nice clean breakdown from Friday's level. Bonds back below that year-to-date anchored VWAP, bleeding into 93. If we overshoot that previous pivot point, then I really think 90's on the table. And I don't really like that because I'm long bonds, but there it is. We're just not getting that turnaround that it was that we were all looking for. Yeah, pot stocks are down too, but looks more like an algo print than anything else. Just a dash here. You can see we're not really getting any flows. And it's just a wave anyways. We need Bitcoin, semiconductors, and the Mag 7 to flip around and go back the other way. Yeah, they're doing a really good job trying to balance this out. Of course, the NASDAQ being a little more tech heavy, it's down a little bit more. But all in all, they're doing a reasonably decent job of keeping things balanced. So this isn't uncontrolled fear, everybody dumping it, trying to sell into the all piling on, trying to short it. This is just some structural pullback. And that's how I would treat it too. Look for your major options levels, your intraday stopping points, and keep your eye on the clock, because when they flip it, it'll happen textbook. Names in the S&P that are down at least 0.5%. You can see the semiconductors all piled up in there. They're the ones you're going to want to keep an eye on if you're looking for that V bottom rally day. Transports, some software companies, but the big one is the semiconductors. Just we got to get that to change. We got 16 names down at least 0.5% in the S&P, and in the NASDAQ got 36 names down at least 0.5%. And you can see those semiconductors all in here, just it's just piling it up, right? Therein lies the issue. So we got to get those semis to turn around, get the Mag 7 to turn. Otherwise, I mean, they can try it with options. Whether or not they actually get it done will be something completely different. For names that are up, we got 2 in the NASDAQ, and 5 in the S&P. So obviously more bearish than bullish. And for the names that are up, we're not really seeing financials in there yet. But that's another distinguishing characteristic between the S&P 100 and the NASDAQ 100 is the NASDAQ 100 doesn't have the financials in it. So look to see if we can get those to start creeping in on the S&P side. That can help with a flip, because financials are one of the 3 sectors that can help us rally. Pretty simple day. Be careful. Watch the clock. I'll see you all Wednesday. No morning briefing tomorrow.